Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty is indicating a start on the lower end. Let's see whether that dip is bought into or not after a week that saw some bit of sell-off. Let's welcome Prakash Diwan now joining in. Prakash, always a pleasure speaking to you. Welcome to the show once again. Good morning. I want to talk about the FMCG space. A lot has happened over the last 1 week. The latest is that HUL's board has formed an independent committee to evaluate all options for its ice cream business. Now, this is pretty much in line with what the global parent has announced as well, to separate the ice cream unit by the end of 2025. And the company itself has been saying that, they will follow all the timelines as what the global parent has said. And if you look at the last quarter results as well, along with the numbers, they announced the selling of their water purification business for about 600 odd crores. So the route is clear: focus on the core businesses, grow the premium, and perhaps get rid of or, house all the other non-core businesses in different entities. With all of this and the impending festive season, how would you look at the consumption space and HUL in particular?
Good morning, Mangalam. So, I think what HUL is doing is something which has been on the cards for a while. It's very clear. Wherever we've seen some green shoots within the FMCG space, it's been on consumption in semi-urban and rural markets. And, a water purifier business or a ice cream thing, given the constraints on storage and handling, is not the same that most of the other products would go through. And remember, most of the revenue growth and margin improvement is coming from the premium segment, right? Whether it's a personal care segment and some of the other products that they've launched deepen their hair care segment and all. So it's going to be very, very essential that they realize what is it that they want to go into the next leg of growth with. There's been no capital expansion from HUL except for an acquisition that they made a couple of years back. So from that perspective, I'm sure they would be following this up with some expansion in the product categories that are doing well for them. And that's quite positive. The stock's not very pricey in that sense. If you look at FMCG as a pack, it's anyways not valued at those historic highs that we used to see. And HUL gives you that comfort. So it's a good bet. But, of course, the competitive intensity with ITC also trying to do a similar rejig in its FMCG portfolio and finding new energy is going to be there. But I would believe Dabur, Godrej Consumer, to some extent, of course, it's not as domestic focused, but some of these Marico, Britannia, all of them are looking much more positive going forward into the, not just the festive season, but it's more of the post-monsoon effect. So I would believe FMCG will, one of these days, get some sort of a re-rating spark. And we'll see that. But from a longer-term perspective, I think it's a very, very decent risk-reward in most large FMCG plays. So I would believe people will start looking at it a bit differently in terms of resilience rather than, overvaluation is not a concern. Growth is coming back. It's troughed out in that sense. So from that perspective, it does make sense to have some allocations go up to this segment.
Prakash, hi, morning. Have you been tracking this boardroom battle in Godfrey Phillips? Modi versus Modi. Now, in the AGM, Beena Modi has secured the shareholder approval, so she will stay on. About 86.5% of the shareholders have voted to reappoint her as the managing director. And the stock on Friday was up 12.5%. Year to date, it's gone up to 40%. Your thoughts on Godfrey Phillips?
Good morning, Rima. So it's been quite interesting and challenging because there have been so many twists and turns in this entire battle leading up to this overwhelming support for continuity of Ms. Modi as the chairman. So, I think what the street is probably very happy with, or would rather be happy with, or would settle with, is continuity. It's like, let's get over with this whole thing. It's a very good business, very decent margin growth. You've seen the way the margins have been for the last 2 years. I don't see any reason why somebody would not want to bet on this if continuity is ensured in some way. So if this overhang actually gets out of the way, people will the market will want to add, because this is it's the only stock that you have in terms of diversifying your exposure beyond ITC, right? So and ITC comes with its own share of bundled salience apart from the tobacco business. So from that perspective, it's something which will grow. And by the way, on the ground, if you see the kind of numbers that they've been ratcheting, they're fairly strong as compared to what they did a couple of years back. I think some of the JV, some of the tie-ups, brand tie-ups that they've got have worked very well for them, particularly the Marlboro thing. So I believe as a company, it will do better. And if this is out of the way, there'll also be a little bit of a PE re-rating, or at least ensuring that the PE remains at slightly better than 6. So yeah, quite positive in terms of a development. I really don't know if there's anything else beyond this development which would kind of come up and throw up surprises. But if this is where it stays, it definitely will be seen as positive.
Will be seen as positive indeed, 240% in the last 12 months, and that's a massive outperformance as against ITC as well. I was looking at some of their volume, reported volume trends. Over the last 6 quarters, they've beaten ITC by a factor of at least 80 to 100% on 5 occasions. It was just once where ITC did better. That was in Q1 FY24, where Godfrey did 8.1% and ITC did 9%. So they've been gaining market share across the board from the leader. And at the same time, the other imponderable for them will be, what kind of money they can raise by selling their retail businesses. Remember, earlier they had announced the decision to go ahead and initiate necessary steps to exit the retail business. The gross sales in the first quarter for the retail business was close to around 99 odd crores. So assuming you analyze that to close to 500 crores for this year and give it a multiple of 4 to 5 times sales, could they raise that 2,000 crores, 2,500 crores by selling their retail business or not is the big question. Not necessarily profitable right now, but let's see who throws their hat in the ring to go ahead and buy that business.
No, absolutely. We'll sort of take this forward with more and get you some sort of sound bites as well, which we had. Ashmit had spoken with the management earlier there. Let's, Prakash, good morning. Ola, I mean, the 1 month share lock-in for Ola ends today. Any thoughts on this one, quickly?
So, good morning, Prashant. So, I think the market gave its verdict on Friday. We saw in anticipation of what could happen already, the smart money would have started moving out. And I believe it'll probably stabilize at something which is much more realistic, which is the sub 100 mark for sure. Of course, I was surprised at the move itself, but I wouldn't be surprised if it softens a bit from here. And settles at that 85, 88 zone, at some point in time, not today itself, but over the next couple of days. See, it may not happen that today you'll get all the exits, but today onwards, you'll start seeing a situation of vulnerability, which is where people would want to kind of, take the bets off.
From the little that you've heard of from the management of SP Apparels, what are your thoughts on this one and the entire textile/garment space? Anything that you like in particular?
So, Mangalam, I don't have a very definitive view on SP Apparels because apart from this Bangladesh angle, the rest of the business is something which I'm not very familiar with. But all I can tell you is the word that we get from talking to some of the other players like PDS and Gokuldas and even names that have been more active in the Bangladesh rating tells us that while things haven't kind of, improved out there, in that sense, it's the confidence that a lot of the European buyers would, not have on Bangladesh getting to normalcy in a very, so this thing, and this recurrence, the probability of recurrence is what they're more worried about. So a lot of the orders will actually flow in from, that to the Indian markets, and that's going to be extremely positive. But you'll have to look at the larger players who will be able to manage that at efficient costs, because it doesn't mean anybody who gets new orders will be able to execute that very profitably. So from that angle, I think Gokuldas and PDS and all will probably benefit.
Prakash, did you see some of those pictures?
Yeah, Prashant. Yeah, I did. And I did read up on what Mangalam is alluding to, but I choose to ignore it in the benefit of the bull market. But yeah, it's nice to kind of, I love the way they've positioned the bull along with, this whole representation of the retail investor. That's quite democratic in that sense. Yeah.
No, absolutely. And I think the primary market action also kind of tells you what's happening, right? With all the retail participation, etc. Any other sort of new IPOs which are open, or there's one which is listing today. I think Gala is listing today, right? And the indicative open is about 50-60% higher. There is in terms of the grey market, etc. And you got this Bajaj housing. I mean, just your thoughts on what is open, what is coming.
I think I'm not too much of an IPO buff, so I don't know about the listing premium that some of these names will get. But Bajaj housing is very clear. Bajaj Finance is something which I think will be very important for people to look at seriously, and at some point in time, depend on it to represent the segment, the growth of the segment in their portfolios. The anchor allocation is absolutely stellar in terms of participation, and I expect it to do much better in the medium to long term. I don't think it's a listing pop kind of a thing. It's something which you would cherish to have in your portfolio over the longer period of time. So after a long time, you have some very high quality paper that's coming into the market, which will sustain ups and downs for the next many years. Unlike some of the IPOs, which you forget after 2 months. I mean, everything's done and dusted, and people don't even remember the name. So I think that's what needs to change. The quality of paper that we badly need, Prashant, given the liquidity gush that we are seeing, it'll always help if you have more quality coming in and size coming into the market.
Thank you, Prakash, for joining in to